You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates, and today is a special day because each Wednesday is the opportunity for me to connect with some of my most active clients and share with them what the market is doing. So I'm already in full research mode, but to boot, this morning at 5 a.m., the Toronto Real Estate Board unlocked some amazing fun facts that we're going to dive into. They gave a press release. Typically, you got to wait until the beginning of each month to get the prior month's stats, but this month, due to everything going on, they've released it early, and we're going to be chewing on it before you even see it in the news. This is amazing and exciting. This is the best article that's going to come out this week, and I'm so excited to break it down with you today. Today on our podcast, I want to cover a few things. I want to talk about what's happening in the market since the coronavirus shutdown. As well, are landlords most vulnerable to the downturns we're experiencing right now? There's some articles that suggest they are, and I want to talk about what their arguments are for that and get a little bit more info on how that's all working as I talk about my investor clients as well. And how is Toronto responding to no multiple offers here in the GTA, and has our pricing strategies changed in order to adapt? So without further ado, let's jump right into what the Toronto Real Estate Board release is for mid-April market update. This article was just made my day. As soon as I saw it, I'm so excited to see this because, like I said, Wednesday is an opportunity for me every week to share with my clients what's going on. And the reason for that is by Wednesday, most people and most home sales that have happened over the weekend has now been uploaded online. Sometimes there's a day or two it takes before it gets posted. And so Wednesday is usually a pretty comfortable position for us to get a feel for what happened over the past week. And new listings tend to come out on the Thursday and Friday based on that information. But today is just an amazing day. They've released information that I am so excited to share with you, and actually has me so optimistic about our market here in Toronto. You're going to see why in a minute. If you've watched the last few, if you've listened to the last few mornings that we've done podcasts, some of the news has been rather gloomy and dim and just sometimes not a whole lot of fun to listen to, but I want to make sure we're painting the full picture of what the information is coming out. And remember, don't just take any one article as the Bible of what's going on in our marketplace. You'll see that what I'm trying to accomplish with these morning podcasts is the information that I'm reading and the news that's coming out. I'm kind of digesting it myself and sharing it with you as it's coming out. And we are creating together a framework for what is happening on whole in our marketplace. And so today we're seeing at the beginning of this podcast anyways, right at the beginning, I want to share with you the good news that's coming out from the Toronto Real Estate Board. Now, it might not appear as good news, but I'm going to position it for you as to why I think this is really good news. So here's the article. Toronto Regional Real Estate Board, that's what they've changed TREB to as well. It's TRREB now. So interesting they did that, but that's what's happened. They've kind of done this rebrand thing. President Michael Collins is reporting results for the first 17 days of April 2020 in order to provide some guidance on the impact of COVID-19 on the Greater Toronto Area housing market. This is the first number that I looked at, and I've got it bolded here. Greater Toronto Area Realtors reported 1,654 home sales through TREB's MLS system during the first 17, down by 69% compared to the same period in 2019. That's key, okay? 69. Make sure you remember that number. Hopefully it's a memorable enough number for you. The reason for that is year-over-year sales declines in percentage terms were the greatest for the detached and condominium apartment segments. In the detached segment, the higher end of the market was particularly impacted in the city of Toronto. That's all they've said there, but it also kind of makes sense. And the reason for that, if I were to explain it, is affordability. As you cross over $1 million, you're required to put 20% down. And so it becomes a lot more expensive. And so naturally, there'll be more price fluctuations, and some people able to afford it and others not. The other thing they're saying here is the condominium apartment segment has traditionally attracted a high share of first-time buyers who in times of uncertainty can put their decision to purchase on hold. So that's the other side, right? And then we've got these condos, we've got people that are first-time buyers, and there's a bit of uncertainty. These guys are probably affected in their jobs, and they don't need to move. I don't find this to be a very strong argument, but they are suggesting that the lower affordable homes are the ones that are being affected as well. I personally believe that there's a big opportunity for people getting in the market, but if it is your first home, it's your first purchase, I can see there being a little bit of a risk. And those people, in theory, are what's kind of slowing down the rest of our market, because if the first-time buyers aren't buying the homes of the people trying to sell and upgrade, then that stops the luxury. And so it creates this trickle. And ultimately, first-time buyers kind of stimulate the market. That's why there's a lot of talk about affordability and getting them in our marketplace, because they are the engine that fuels the spring market. They come in the beginning of, let's say, February, March, and then by the time you hit April, May, you've got top peak prices because people have kind of moved up their way through. And so the dollar value of the transactions go up through the spring. Okay, so remember that first number. So home sales were down 69%. Here's the second number that I want to hold in light of that. The number of new listings was down on a year-over-year basis by a similar annual rate, declining by 63.7% to 3843. This is great news. I am shocked. I'll be honest with you. I did not expect that number to be that close to 69. I'd like to see it be exactly the same, but that is pretty darn close. What that means is the market that we're looking at today, although quieter from a months of inventory perspective, the number of new listings versus the number of sales, that kind of that equation between last year and this year is unchanged virtually, which blows my mind given some of the figures that we saw last year. Last month. Let me jump down and share with you what that news was, just to remind you guys. This was comparing from the end of from March 15th till April 5th. Okay, so we're talking 2 weeks ago. These numbers were what we were looking at. The average price, there was an 8% drop in price and a 10.5% drop, but the number of sales dropped for freehold 70%, so about the same, and condo 76%. However, the new listings dropped 50%. So we were looking at like a 20 to 26% drop overall in like a spread between new listings and the number of sales. But now 2 weeks later, we look at those same numbers and the spread is almost completely removed. It's completely closed. So in some ways, because people weren't able to purchase property or weren't able to sell their home, it's directly resulted in people not wanting to purchase on the other side, and to this almost perfect balance where now things are slowed down. And let me tell you why this is a good thing. Okay. The months of inventory, this has been the biggest opportunity I've been saying is available to buyers. And if it's going away, it's net good for everybody else, because we're not going to see to the same extent price drops, because everything is flat across the board. People aren't getting deals. The number of listings aren't skyrocketing. They are going up. We can see there's a bit of a spread here. They're going up, but very incrementally. And the opportunity for buyers isn't as good as I thought it would be, which is very good news for people's selling, and it's very good news for the sale price. If your bottom line is, I want my sale price to be as strong or near to what it was this time last year, this number should come as huge encouragement. Stay put. We've got some really good news coming out. We've got the stats on the coronavirus. We seem to be doing very good as far as projections. And this was some of the good news we've seen over the last few days coming out from all these articles. But now you're starting to see there is some serious strength. I'm starting to see the strength that's kind of underlying our Greater Toronto Area marketplace. And so that is amazing news. And it's actually shocking to me. And I'm so excited to see it. And this news came out this morning at 5 a.m. in a press release. And you guys, the sooner you're listening to this podcast, as we put these out about 9 o'clock every morning, you're going to get this information. I've already done update videos for the next 2-3 weeks that are going to come out in videos. And those ones don't even have this information. You are getting this, in some cases, weeks before everybody else, because typically these releases happen monthly, not bi-monthly. Okay, we're gonna continue here. So, talking a little bit more about the new listings, the fact that new listings trended in a similar fashion to sales during the first half of April means that market conditions remain tight enough to provide support for the average selling price in line with 2019 levels. That's literally what I just said. And that's so true. The average selling price for sales reported during the first 17 days of April 2020 was $819 some odd thousand, down by 1.5% compared to the same period in 2019. Okay. Let's remember our numbers. Okay. So if they're saying here the average price for sales reported during this time is down 1.5. Let me just remind you of the price drops we saw just last month, April. From March 15th to April 5th, we saw 8% drop in freehold and a 10.5% drop in Toronto condos. Okay, now they're talking 1.5. What the hell happened there? Let me explain that. Now we're in a spring market. So naturally, last year, March to April, we saw price increases that happened during that month. But we haven't seen price drops. So we've seen a steady price. So in theory, we're balanced back out to what that spring would have looked like because there was such a big increase last year with just, you guys understand that we are in a very tight supply market here in Toronto. And so prices have been accelerating so quickly that although we can see a over 5% drop one month, the following month in the springtime can equate to almost a back balanced market in a slow market, assuming that the factors that were causing the drop are gone. And we're going to get into why that drop had happened, and I've alluded to it before, but this is crazy, guys. This is absolutely crazy. This is good news for maintaining the values of your home. Not so good news for people looking to get a deal out there. Maybe now is the time to sit on our hands, or you better get acting quick, because as soon as these numbers start to hit the mainstream, people are going to say, you know what, we're good. I'm just going to take my emergency benefit and I'm just going to sit here until the fall market when things go nuts again. Because if they're not going to take much of a hit now, just you wait, guys. And then it says here, it should be noted that selling prices have also followed listing prices, with average listing prices down by a similar amount. It just literally just gave my tip away here. So the reason for that is the multiple offers. And we'll get into a little bit how that's working and the stats on that, because they are quite surprising as well. We'll cover what's going on there. So the average selling prices have not been noticeably lower than listing prices compared to last year. This is further evidence that the mix of homes listed has changed compared to last year. Just some other quotes, because why not, from this article coming out from the president of the Toronto Real Estate Board. State of emergency measures currently in place, including the necessary enforcement of social distancing, has impacted the real estate market in many ways. In the condo market in particular, individual condo corporations have curtailed entry for non-residents. I've seen this. I have clients who have buildings that say they're not allowing showings without conditional sales. And then they will allow it at that point in order to maintain that. So that's becoming clearly more prevalent if they're putting it in these press releases. However, once recovery begins, it will likely accelerate in earnest as buyers seek to satisfy pent-up demand and will build up over the course of the spring and at least part of the summer. TREB and its partners and association members can now take advantage of virtual open houses access through listing searches on TREB. I announced that a few days back that had come out, so now they're kind of bringing it again. They got to remind these old folks, because who's going to use these things unless they're really, they got to say it to them 6+ times before anybody responds. It's a hard sell to the old folks, but that is out there. There are now virtual open houses available. And looking forward, decline in home sales will be likely strongest in Q2 2020 as strong social distancing measures remain in place. However, if public health forecasts assuming strong social distancing measures play out as expected, we will likely start to see improvement in the market activity in the summer. Recovery will accelerate through the fall as social distancing measures, they really like that word, are substantially relaxed. A large number of people return to work from furlough, and home buyers take advantage of very low borrowing costs that will remain in place to spur economic recovery. The calendar year average price for 2020, this is coming from the Toronto Real Estate Board, will likely remain near the 2019 level and will be buoyed. I call it buoyed, but I get laughed at sometimes. Maybe buoyed. It will be floated by the 15% year-over-year growth experienced in Q1 2020 and resumed growth in Q4. So there you have it. The news coming from the Toronto Real Estate Board, which is of course pro-market and a very optimistic source, is flat prices. Again, in light of the drops that we've seen recently, they're still convinced that because of the accelerating we saw last year, that although we're going to see these drops, they're only going to equate to putting us at par with last year. So for those people that are sitting on the sidelines and hoping for a crash, don't read articles like this, because they're going to break your dreams and they're going to hurt your soul, because maybe there's not as many great opportunities as you think in one of the tightest supplied markets in North America. Moving on. I want to get into our next article that talks specifically to landlords. I've got a lot of clients that are landlords. I know a lot of people like to work with me on just buying and selling their homes, but for those of you who don't know, my primary client is actually landlords and people who are looking to get into the investment space. And so I wanted to cover this topic because I think it's important for them. and for you guys who are listening in that environment to hear and to kind of talk about a little bit where there might be opportunities if you did want to make a purchase, and just some of my thoughts on this. So the article comes from Global News, Landlords Among Most Vulnerable Homeowners During COVID-19 Pandemic. It reads, data on Canada's housing market have yet to reveal the full impact of the novel coronavirus pandemic. But market watchers say one group of homeowners looks especially vulnerable: over-leveraged residential landlords. This is a quote from the Stephen Brown of Capital Economics. Says, you have investors who are sitting on a portfolio of maybe 5 to 10 rental properties and had been renting them out on the short-term rental market. So wait a minute. Okay. I mean, me personally, I don't look at short-term rental market the same way as I look at residential landlords. When I'm talking residential landlords, I tend to steer people towards the long-term rental market, but they're obviously referring to, in this case, Airbnb. But they do transition, so I want to keep going. In the pre-coronavirus economy, Airbnb seemed like the best game in town. It says Toronto mortgage broker. Often, real estate investors would make much more money renting a home for weeks or days at a time than they would have with a traditional lease, he added. Well, yeah, that's true. But with the country on lockdown and the border with the U.S. shuttered, the short-term rental business dried up overnight. What happens next could have implications for both the rental and the property market. Some investors are likely scrambling to find long-term tenants for their short-term rentals. Here's our pivot. This could add some much-needed supply to tight rental markets, he added. Vancouver, Toronto, Montreal, and Ottawa all had vacancy rates of less than 2% in 2019. I saw them in the 1% just a few years back, according to data from the CMHC. But some struggling landlords may just have to sell their investment properties. Okay, so what they're suggesting here is people are not able to make money. They're not able to break even, and so they will be forced to sell their properties. So that's a big jump. So is that going to start to happen? Potentially. You've got to be in a really big hole. You've got to be making. So here's the thing. If you can find a tenant for your space in a marketplace that does still have, even in its worst, less than 5% vacancy, you should be able to find someone in the next couple months. And you're not making enough money to cover that gap. So not cover the entire rent amount. I guess where there becomes that challenge is if you do have a tenant who's not paying, right? Like if you've got someone living in, that's where that becomes a bigger risk, because if they're not paying, now you are covering that full amount. So maybe there needs to be a little bit more sympathy on that side. But I would think that if you have got even a modest reserve of, let's say, $10,000 to $15,000, I mean, if you're purchasing a $500,000 plus $1,000 home and you don't have a reserve of $10,000 to $15,000, then you are really, this is really over leveraged. Like that statement of over leveraged is pretty strong, given, I guess it comes down to how many months this happens, right? Right now, I still think that's so fast that you had to dump your property. You are right up to the teeth in debt, and you got to watch what you're doing. But if this does prolong for 2-3 months, then I think this becomes a little bit more of a legitimate argument. This is just my opinions anyways. Some of these people have tenants who simply can't pay anymore, and maybe their own incomes have been impacted. This is true, right? This is true. Mortgage payment deferrals options aren't always available for investment properties. While Ottawa's planned rent relief program only applies to commercial landlords, we've talked about this before. I am an advocate at this point for residential rent relief. I think it would protect and cover this article. I like seeing articles like this because it gives me hope that maybe there will be people listening to the struggles that landlords are facing. And who knows, maybe we've got government officials listening to my podcast. We are number one on Google Podcasts, so perhaps. And if that is the case, ladies and gentlemen, please listen. We need to protect the landlords and stop this feud between the tenants and the landlords. It's not fair. And you guys caused this by shutting everything down. So let's make sure that we're able to make sure that that's a seamless relationship and not a whole bunch of evictions and crisis happening at the other end. Cash-strapped residential landlords then could be among the first homeowners forced to offload real estate they cannot no longer afford. I think we've beat that dead body with a bat. So let's move on. That's a terrible illusion. Another set of homeowners in a tight spot are those who bought a new home before the lockdown and have yet to sell the old one. Okay, now we're talking. I wish this was the first part, but the article is about landlords, so that's fine. But this is so true, okay? Guys that have already purchased a property and they have not sold their home because they got a little overzealous and they thought, you know what, selling is so easy in this marketplace, which is true. My advice to clients is never to do that. And in the last 5 years, I've seen twice now people get completely caught by this. Those two groups of homeowners are the main reason Brown forecasts a 5% decrease in house prices in the next 3 months. So there you go. So that's the counter argument. So you've got it. We're balancing somewhere. I would say that's kind of an extreme now that we've seen the prices level out almost from last year. So you're seeing either a flat price line from last year or potentially a 5% decrease in prices. That seems to be kind of where we're floating in the industry. In some of the largest cities like Toronto and Vancouver, price could drop a severe 10%. Of course, that includes that high-end homes, right? Because the home prices are more expensive. So the price drops are more severe when it comes down to the total numbers. While LaRock isn't seeing this happening yet in Toronto, so that's the caveat here. This isn't yet happening, but could. If property prices started to fall, the risk that a property won't appraise for what a borrower has offered to pay will rise. Now, ultimately, that is happening. That part's happening. So I have seen situations and talked to people who have clients who have purchased something and they're not appraising at the same number. And so now they're getting completely caught. So that is happening right now. So that, I think, is the bigger opportunity. So that combined with they're getting appraised. So they're getting caught on both sides. Imagine you are trying to sell your home and you've purchased something, but at the same, so now you're caught with having to dump your property. Plus the home you purchased is getting reappraised and the value's coming down. Oh, damn. You better have a good lawyer. And I feel bad for you, son. Still, home buyers can protect themselves against the risk of low appraisals by making their offers conditional on financing. And I guess the reason you have to say that is because there are environments where with multiple offers, people were taking those out. But I would even argue, and where I want to leave off on this particular topic is, guys, if you think the price is going to drop 5 or 10% and everything is lined up for you to submit an offer, the conditions seem to be going against you in that, like, the buying opportunity window has almost closed. Like, it's closing from what I'm seeing, at least based on these figures. So if that window is closing, and you're in a position where you're like, I'm trying to find an opportunity to jump in on this market and try and, boost this. Like, at the end of the day, there are people that need to sell their home. You're not doing a disservice to our market to purchase a property from a place that's desperate to sell. But why don't you just hedge that 5 or 10% drop you're expecting and put something in now? Get all the conditions you want in a market that a few months ago you couldn't even have had these conditions. So I don't understand the people sitting on sidelines for the sake of market fear, because there is... I guess I do. I feel for you guys. I understand the stresses, but you can hedge those losses as an investor. I get it more if you weren't an investor, but as a person who is investing and tracking the market and looking for opportunities to purchase at the lows, build your own low. Throw numbers at so many people, create your own low in this marketplace, and find yourself a nice little property. Anyways, moving on. COVID-19 causes an 80% drop in the number of condo transactions in Toronto. All right, so this is our final topic I want to talk about. So I want to talk about why prices have come down. And they came down very quickly, and now they've seemed to level out a little bit. So something in the last 2 weeks was different from the 2 weeks before that. What changed? And this article just talks about it briefly, but I figured this is the best spot to see it because they actually had the numbers for it. And I won't go too far into the article. I'll read the first paragraph just to warm us up here. The old saying, what goes up must come down, definitely rings true when it comes to Toronto's current housing market. After months of consistent activity and increasing prices, we're finally starting to see both prices and the number of transactions fall as a result of the COVID-19 tight grip. Okay, so let's jump down to what I wanted to highlight. Additionally, they say, this individual that's being interviewed in this article, less than 30% of freehold and 19% of condo inventory were priced for multiple offers. That is low. A big shift from previous weeks in which a majority of the inventory was priced to accept multiple bids. Those numbers, guys, were over 60%, definitely over 60%, even as we were on this cusp of COVID-19. So now we're seeing them less than 30%, and in the condo space, 19%. So people are pricing things for what they're worth. They're not pricing them for multiple offers in an environment where we were getting so many multiple offers. So I said, if I were just to say as of yesterday, because this news just came out today, this is brand new news. This information as of yesterday, I was even saying, which sounds like even yesterday I said, doesn't sound so amazing. But a couple weeks ago, I was clarifying the reason for this price drop in my mind was because of the multiple offers being completely taken off the table. That was a price increase that we were experiencing because of the amount of competition, which is highly competitive in our marketplace. Now that's gone. And so, and we can see it here because we've got less than 30%. And I think that number might even go down further, because if you're still listing your home for multiple offers right now, there's no showings. Your offers that are going to come in are going to be garbage offers, potentially, if you get any at all. And they're going to have every condition in the book. So what, you're expecting to get 2-3 offers with multiple conditions? It's just not the right environment to do multiple offers. And so I can't see that continuing. These numbers are going to stay low until the doors open in our province. I'm going to leave it here today, guys. This has been an amazing morning for news. I hope you guys have learned a ton. I learned a ton just from seeing these articles. This is an amazing process to have been able to wake up every morning for 6 days a week with you and to share the latest news in the Greater Toronto market. If you guys are loving on our podcast as much as I love making them, make sure you leave us a good review, specifically if you're on iTunes, because I think that's the only platform you can do it. Prove me wrong. If you can give us a rating on any other listening podcast for podcasting applications, then please do so. And I love getting emails and texts from you guys. My information is on the channel, so feel free to send me a message if you have any topics or articles you want us to cover one morning. And this has been fun, and we're going to keep doing it. We're going to keep rolling forward. And this has been Bradley from Watson Estates. I'll see you the same time tomorrow morning. Take care and keep it real.